What is happening, investors? It is your boy Jack. I am not a financial advisor, and excuse the way my hair look, man. I need a haircut. I've been busy all day. It is way later than I'm used to recording. I can't find a hat. I don't want to get this video made, so we're going to have to put up with this hair today. And there are a few primary things I want to speak about today, okay? Some things to do with payroll, some things to do with inflation data, some things to do with the consumer price index that we have to be aware of going into Thursday. And then also this right here, earnings whispers, the most anticipated earnings releases. Now, the reason I don't mind making this video a little bit later is because I'm not really too interested in anything that happened on Monday. Tuesday, there's a few things I'm looking at. It really is Wednesday after close and Thursday before open that I think we're going to get a huge impact in the markets. We're going to get some considerable moves market-wide, not just in the companies that I am going to highlight in today's video. And that largely also does come down to the consumer price index being spoken about on Thursday. So the things we're going to be speaking about, and we're going to see if, any of these stocks are looking at nice valuations, if I plan on potentially picking up any of these stocks for either the first time or add into my position as of right now. So really quickly, right before we get into the video, my friends, could I please ask you to hit that juicy like button? It really helps me out. Drop me a comment down below. Let me know, what are you watching this week? Are you playing something's earnings, or are you just dollar cost averaging into this market that's been going down and down and down? And please, my friend, if you are indeed new around here, hit that juicy red subscribe button. Also, if you would like some free money, some free stocks, sign up to Webull using my link in the description and in the pinned comment below. It's that simple. Each stock can be worth up to $3,500. You can get up to 5 of them. The first one you get just for opening an account. It is that easy, my friends. So we know there's a lot of doom and gloom in the markets right now. Things haven't been great. Pretty much every major index has been down. We saw the likes of Facebook drop 25% in a day based off of bad earnings. We know we've generally been in a pullback. It seems like there's not a lot of money to be made. A lot of people are really scared. There's a lot of fear. There's been a lot of panic selling, and maybe not quite as much buying in any of the indexes out there, or any markets in general. So what does the news show us right now, okay? Well, non-farm payrolls rose 467,000 in January, well ahead of the 150,000 Wall Street estimate. So huge beat in that respect. Leisure and hospitality led the gains, while professional and business services and retail also posted big numbers. Wages then surged, rising 0.7% for the month and 5.7% for the year, okay? Now, with all of that being said, unemployment rate actually edged higher to 4%, as opposed to what was expected to be 3.9%. So, some good and some bad. Now, why is this important to stock market investors, okay? You would think immediately it's just a good thing, all in all, you know what I mean? Payroll's better than expected. Well, not necessarily. After the stunning jump in January jobs triggered speculation, the Federal Reserve could be more aggressive about raising interest rates. So, obviously good, happy days. People are becoming employed, but it may mean that the Fed could, make those interest rate hikes a little bit more aggressively, maybe a little bit more often. We're going to have to wait and get our update about that relatively soon. I'm still of the opinion that March will just see the 0.25 point. We will have to wait and see, though. I don't think this is going to be the biggest surprise in the world to them, even though it was outside of Wall Street's expectations. I'm sure they would have been taking all of this into account as they've been making their decisions, their ongoing decisions. And then also, why Thursday is going to be such a big day, not just due to these earnings here, is this. The Bureau of Labour Statistics will release its January Consumer Price Index, the CPI, on Thursday, which is projected to show inflation rose 0.4% in January. So this generally will move the markets. And if there is any big upsets, any big surprises, you bet that again we are going to see a large red day in the market. And conflictly, if it's better than expected, we could see some nice upward moves. One more thing I'd like to point out really quickly, guys. The S&P 500 forward PE ratio is at about 22.35 as of right now, okay? So historically, that's very high. Generally, the PE ratio itself is in the rounds of 15 to 17. So keep in mind that valuations are still generally very high in the S&P. You're going to see similar things for the Dow, the Nasdaq, the Russell 2000, pretty much everywhere you look. So when I look at these earnings that are coming out, I'm like, right, what am I actually interested in here? Because, most people don't follow most stocks in the world. Some big news came out for Spirit there recently. It's not something I'm too interested in right now, but they're merging with someone I do believe. But anyway, the first one, which is after hours today on Monday, is Simon Property Group, okay? It's an REIT. I've marked it in green. It's interesting. I'm going to see what they do. It's not really going to affect me. I don't plan on buying them personally. Do keep in mind that they are an REIT, okay? Their forward PE is at 22.57, so I mean, it's in line with the S&P as of right now. Price to sales is extremely high, price to book is extremely high, and it's just not really one that's going to fit in my portfolio anytime in the immediate future, but it's still one I like to keep an eye on. It has performed really well over the past year or so. I mean, we used to speak about this one on the channel a long way back, but yeah, 1 year chart from $98 up to $148. Zoom out a bit further on the 2 year, from the March crashes from 48 up to 150. So I'm going to be keeping an eye on it, but it's definitely not one I care about too much. And the same goes for BP, just because of how crude oil is going at the moment. I want to see if, you know, if there's any large moves. Maybe we could look a little bit further down the line if we wanted to make some short-term plays. But yeah, BP, not really anything I'm mad interested in. Cisco, I am, partially because it gives us a better understanding of, you know, what's actually happening in the world, not just what's happening with Cisco. Now, if you guys aren't aware of who Cisco are, Cisco Corporation is an American multinational corporation involved in marketing and distributing food products, smallwares, kitchen equipment, etc., to restaurants, healthcare professionals, educational sectors, everything, okay? Now, I really like Cisco. It will immediately get a place in any dividend portfolio for me, even at current prices. I just want to see what they do. Now, on earnings, Cisco doesn't always make sense. You'll see their last earnings was terrible, and there was a big crash from 81 all the way down to 68. But we can also see bad earnings back here, and these were terrible, okay? The surprise was 50%, and it went up. So I definitely wouldn't be choosing these again as a stock to play on earnings, but keep an eye on them. And it's even one I would make a medium-term play on if I saw a similar pullback to here. Or if maybe it even broke this, what is a triple bottom, and filled in this gap, I would look to buy in. But again, it's just one I wanted to point out, and it gives us a good idea of how other sectors are doing. That is one of the key takeaways from today's video. It's also why I'm going to be looking towards Coca-Cola and Pepsi. That's before open on Thursday. Again, I don't necessarily plan on buying them, but it gives us a good idea of consumer sentiment. It gives us a good idea of how much expenditure people are throwing out there at these discretionary items. Corsair Gaming, Tuesday, after the closing bell. I mean, what's there to say about Corsair that hasn't been said? I love them. Absolutely love them, okay? And they have been bet to the ground. It is absolutely horrific to look at. I will tell you, it does not feel good to be a Corsair Gaming shareholder as of this moment in time. But PE ratio at 16.2, okay? Current PE ratio 16.2. Forward PE at 11.68. In comparison to the S&P 500, closer to 22.35. I mean, Corsair is well valued there. Price to sales of 0.96 as well, my friends, okay? They're down 60 odd percent year to date. It says they're trading at 1928. They are downtrending. They show no signs of turning around anytime soon. I still can't wait for these earnings, and this is a stock that I am buying. I bought recently, not too long ago, and I will continue to buy for a long time. I really like this company. I don't have to worry about them. Even if they go down to $10 tomorrow, it's one where I just wouldn't be worried holding it for a long time. And I can't say that about many companies in this given climate. It was easy to say that bull run March, well, after March 2020, when everything was easy money. I can say that now for Corsair, okay? So that's Corsair, and that is Tuesday. That's what's of interest to me. And then there's not too much more personally that I'm going to be, you know, keeping a really close eye on. Wednesday, after the close, we have Walt Disney. I might open a Disney position. Actually, I have a Disney position, but I might add to my Disney position. It's a very, very, very small one in my overall portfolio. If we get up that Disney chart really quickly, you'll see they're already down considerably. From those highs, we were all the way up at 200. It's down at 142. It's gapped down a couple of times. So maybe we'll get bad earnings, and boom, it'll gap down a little bit further maybe. We're going to have to wait and see. I mean, Disney's at 140, guys. I don't think a lot of people expected this. I think Disney is at relatively nice prices. If it was to make its way down towards 110, 120, I think it would be an absolute no-brainer to an awful lot of people. That forward PE is still up there at 30.4, so it's still quite high. It still could come down, okay? That price to sales is at 3.8, my friend. So there definitely is room for it to come down lower. And I suppose that is why it has trickled down since. So I'll be keeping my eyes peeled. The closer it gets to $100, the more likely I will add a considerable amount to this position. And then the last one for me personally is going to be Twitter. Now, look, I know a lot of people are going to be looking, you know, at Upwork, at Zillow, at Cloudflare. Of course, you know, Sonos even. A lot of people, I know a few people have long swings on them. Spirit. These are just the ones I'm personally going to be looking at. But Twitter, Main reason I'm looking at them is I want to see if we see a move like we saw with Snapchat, like we saw with Amazon, like we saw with Google, like we saw with Facebook, because they're kind of up there in the big tech world. They don't really get lumped in with those names, but, you know, they definitely are the tier below. So I want to see if we're going to see the same craziness, and especially the fact it's before the open on Tuesday, and we're going to see the CPI index get announced. I really just want to see what happens Tuesday as a whole. Again, these aren't markets that I'm doing anything short term in realistically. I will be looking at my cursor, and if I see a considerable dip, I will dollar cost average and keep buying these red days as I do so, please. If I see Walt Disney head down anyway, close to that 100, especially if I see it sub 120, yes, I more than likely am actually going to buy them for the first time since very early 2020 pretty much. Cisco, if I see that dip towards the 60s, that will be the first brand new position I have opened in a very, very long time. And yeah, the rest of them I'm just watching for greater economical reasons, basically. But anyway, my friends, that's my thoughts for the upcoming week. Quite a bit is going to happen. The volatility more than likely will continue, even though nothing crazy has happened today, so just do be aware. But anyway, guys, if you watched this video all the way till the end, you are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me, so thank you so much. If you enjoyed, could I please ask you to hit that like button, drop me that comment down below, subscribe if you're new around here, and then if you want those free stocks on Webull, first link in the description and in the pinned comment. It's literal free money. You'd be crazy not to. It takes like a couple of minutes to make that account. But anyway, guys, I'm going to see you all for another video very soon. I hope you have a beautiful, blessed day. Peace.